How should our viewers and listeners synthesize this new heated rhetoric?
I would say that it reflects the underlying tension, which is far more about world power and hegemony rather than the pure short-term challenge of trade. After all, we have two leviathans in global political terms vying to be the top dog. Neither wants to give an inch, and this is therefore hugely more important than just tariffs and trade prices. And we have seen this before when major empires give way to new players on the block. And China has made it abundantly clear that it expects and intends to catch up and overtake. This is never going to be an easy process, and it will go on for a very extended period.
We've got Tencent earnings come down. We'll digest Tencent here in a moment. Alibaba as well today, and we'll get to you on that. James Bevan, very importantly, then, how do you take a grander geopolitical conversation and fold it into your belief in corporate earnings, corporate revenues?
I look at the capacity for very high-quality companies to continue to participate in long-term secular growth. So I would say that the Amazons, the Alphabets, the Unilevers, the Diageos, the LVMHs of the world can all prosper and indeed, from my perspective, look cheap. I would say that Western analysts spend far too much time talking about price-earnings ratios, and actually it's a really poor measure for value. We should be thinking about price to cash flow, and we should be talking about the return of capital. And on those metrics, many of the companies that are optically expensive price-earnings multiple terms, to me, still look way too cheap.
James, we're just getting some Tencent figures. So they're revealing this revenue from advertising. A reminder for everyone watching and listening is that Facebook, WhatsApp, Google don't exist in China. So actually Tencent's competitors for advertising are all Chinese companies. But you see Tencent and Alibaba really seeing their shares decline. And this is because of slowdown in China's economy. Does the trade war hurt some of these companies because people are less likely to shop?
Well, I think that it certainly has a depressive impact on China, and I would say that we are going to probably downgrade our expectations for growth in China if the trade war persists by about 0.5 percentage point. So not major league, certainly a bigger impact than the trade war will have on the United States. However, I do think that it is right to say that China has had a relatively prolonged slowdown, so the trade war is simply the icing on the cake of what has been a really difficult last 6 months.
Okay, but could this, this latest, war on trade actually catapult the world economy onto a significant slowdown?
Well, I think that the world economy has been in a significant slowdown for a period, and people just have to wake up and look at the trade data, which has made it abundantly clear that the global economy is moving a lot slower than the IMF data. And the IMF data, of course, are based on the published numbers. Published numbers for China have, I think, been overstating growth for a considerable period.